Stephen Schwarzman is one of the world's wealthiest people, with a net worth of over $37 billion. He is the chair and CEO of the Blackstone Group, one of the world's largest alternative asset management businesses. Blackstone provides advice for mergers and acquisitions, private equity funds and hedge funds. It is perhaps best known for its real estate investment partnerships, but it didn't do all this from day one. Now, let's take a look at how Stephen Schwarzman built Blackstone Group. At the end of 2021, Blackstone Group stood as a large alternative asset management firm with $684 billion in assets under management. Schwarzman and his team are responsible for deciding where to invest the money from several pension funds, sovereign wealth funds, central banks, and other institutional investors. He has risen to become not only one of the most powerful people on Wall Street as the Blackstone founder and CEO, but by amassing such vast holdings in private equity, debt financing, hedge fund management, and real estate acquisition, he is one of the world's most powerful business people. To become this wealthy, let's first look at the origins of Schwarzman's career. After Yale University in 1969, Schwarzman secured employment with a large institutional asset management firm called Donaldson, Lufkin & Jenrette. In the position, Schwarzman studied business law, corporate finance, and capital markets. He also took classes in stock market analysis and money management at the same time. On one occasion, Schwarzman was asked to interview an executive of a publicly listed firm about whether its stock would be a wise investment. However, many of the inquiries he made went unanswered. Bemused by this, Schwarzman later found out that the executive was not trying to be difficult, but was following insider trading laws, which prevented him from disclosing certain details about the company. However, despite acknowledging why the executive could not respond to his inquiries, Schwarzman was apprehensive about assessing a possible investment without having all of the essential and relevant information about it. He was irritated by this, so he decided to go to Harvard Business School and study further in order to find a solution. The solution was the creation of the Blackstone Group. In 1972, Schwarzman earned his MBA from Harvard. He accepted a position at the then independent investment behemoth Lehman Brothers. By the age of 31, he had worked his way up to become the Global Mergers and Acquisitions Director for Lehman Brothers. Schwarzman soon left the company after American Express Company took over Lehman Brothers in 1984. This led Schwarzman to approach a man named Pete Peterson with the idea of starting an investment company. Peterson, like Schwarzman, left Lehman earlier after the takeover. In 1985, Schwarzman and Peterson established the Blackstone Group with $400,000 of their own money. Schwarzman was determined to make private equity investment the core of Blackstone's business model, as he had never been a speculator in the stock market. He also recognized that privately held firms generally provided far more information to their investors and prospective investors than publicly traded enterprises. Blackstone will have access to more detailed data, allowing it to study investment opportunities with greater care. Interestingly, investors were hesitant to invest in Schwarzman and Peterson's first fund because they had no prior experience in the private equity business. After several years in the business, they determined it was time to enter the market as a M&A advisory boutique to establish recognition and credibility. In 1988, Blackstone assisted CBS Corporation in the sale of its subsidiary CBS Records to Sony Corporation. This was a game-changing moment due to the size of the companies involved. In 1987, Schwarzman raised $800 million for Blackstone's first private equity fund, Blackstone Capital Partners LP, which included General Motors Company and Prudential Financial Inc. as major investors. The funds were used to acquire businesses using a technique known as leveraged buyouts. Private equity funds are typically set up as limited partnerships. That means there are outside investors who contribute most of the money for the partnership. These people do not have to do a lot with the day-to-day management of the company, and are known as limited partners. Blackstone is the partner and representative. They contribute a small amount of money to the partnership. They are also responsible for investing the pooled money into several different opportunities. The general partner receives a management fee, which is usually a percentage of the overall assets in the partnership, as well as a percentage of the profits realized. Say that Blackstone employs the standard industry fund management compensation structure, which pays executives 2% of assets under management and 20% of profits. If Blackstone manages a limited partnership with a total asset base of $500 million and a $150 million return in a single year, the company would earn $40 million in fees, 2% of $500 million, plus 20% of the $150 million. Not a bad sum, I might add. Blackstone would also benefit from the partnership's profits. Blackstone is a private equity firm that has helped generate over $100 billion for its 8 private equity funds. Blackstone Capital Partners 8, the company's latest fund, raised $26 billion in 2019. According to Schwarzman's Yale talk, his private equity firms had an annual average return of 23% from 1988 to 2008. From 1988 to the present, Blackstone co-founder Schwarzman has increased his company's business areas considerably. Blackstone Investment Management Inc. has developed into a leading private equity firm, specializing in leveraged buyouts and real estate investment funds. It also offers mergers and acquisitions consultation, as well as private equity fund management services. Blackstone is responsible for various hedge fund and real estate investment partnership funds as well. Schwarzman's real estate team started buying single-family houses across the US in 2012 with the hope of turning them into rental properties. They plan to buy 50,000 over the next 3 to 4 years. In 2007, Schwarzman took the Blackstone Group public. The company's initial public offering generated more than $4 billion in funds. Schwarzman received $690 million in Blackstone dividends alone in 2014, according to reports. Other people's money made Schwarzman a multi-billionaire. The Blackstone Group, a private equity firm co-founded by Schwarzman in the mid-1980s, was founded based on dissatisfaction with the lack of transparency in the financial markets. Today, Blackstone is one of the world's largest alternative asset managers. The company gets paid to manage money for many institutional investors. Schwarzman was named one of Time magazine's 100 most influential people in the world in 2007. He has given hundreds of millions of dollars to charity over the years. Like the good billionaire is expected to, Schwarzman has donated hundreds of millions of dollars to various causes over time. If you think Schwarzman is a good businessman, hit the like button and let us know.